Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Diplomatic efforts intensify as Israel weighs a response to Iran's drone and missile attack. The UN chief calls for de-escalation to avert a wider conflict. Global markets show signs of stability, with crude prices easing as oil traders largely shrug off Iran's assault on hopes the conflict is contained for now. Plus, German Chancellor Olaf Schultz arrives in China for talks with President Xi Jinping on a mission to dial down tensions between Beijing and Europe. Let's check in on these markets then on the back of, yes, those unprecedented attacks from Iran. But this is not a market that for now is showing significant signs of risk off. Yes, gold is higher, but treasuries are down. The dollar is a little softer and US futures and European futures pointing higher. Of course, the context for the US was that last week was the biggest weekly decline for US stocks since about October on expectations that there will be higher for longer on the rates view coming out of the US and stickier inflation, a stronger jobs market. Currently, US futures pointing to gains of 0.4% then on the S&P. Nasdaq futures pointing higher by 0.4% as well. And European stocks looking to open higher despite the geopolitical risks, up 0.3%. The FTSE 100, though, slightly different picture there, pointing lower by 35 points so far this Monday. Let's flip the board cross asset then. I touched on gold, I touched on oil and US treasuries. Let's quickly look at the pricing then on some of those key assets. European stocks futures, as I say, pointing into the green. Currently, though, when it comes to the oil price, you are lower by 0.3% on Brent crude at $90, just above $90 a barrel. Spot gold, though, higher by 0.5%. Euro dollar with a reflection on what is happening with the softer dollar so far in the session. Euro dollar at 106, just up 0.1%. And the US 10-year yields currently up 3 basis points. So a bit of selling pressure, in fact, coming off treasuries, not the flight to safety that some had assumed over the weekend into US treasuries. 455 on the US benchmark. The other major story of the day as well when it comes to these markets in the commodity space is the sanctioning coming through from the US and UK on parts of the Russian metals market. Aluminium in focus for us, as is nickel. And you can see prices higher on the back of that news. Those restrictions, those sanctions coming into place over the weekend, and the reaction in the markets this Monday then. Aluminium up 4.4%, nickel gaining 3.7%. The consequences for the LME on a reshaped commodities market on the back of those continued sanctions around Russia, given its conflict in Ukraine. Let's go over to the Asian session now. Go back to the geopolitics, of course, of Iran and Israel and check in on how that is all playing into the Asian markets with Vonnie Quinn. Vonnie, what is standing out to you then across the session so far?
What's standing out, Tom, is how different markets are reacting and, in fact, the improvement that we're seeing through the session. So at one point, the Nikkei 225 was pretty much pricing in geopolitical risk. It was risk off. It was down about 1.8%, the topics as well. This was in the early part of the Asia session. But as you can see, ending up the session down less than 1%, not just for the Nikkei 225, which, bear in mind, is also dealing with a yen that's at 153.81 right now. Remember when we hit 152, how it seemed to be panic stations? Well, we're almost 2 big figures weaker at this point. So we'll be waiting to see some more jawboning, if not more, from the Bank of Japan over the next several days. But the MSCI Asia Pacific Index also only down, and I say only, obviously with caveats, down 0.8%. That's because we had an update in China. Regulatory crackdown on Friday had enthusiasm built into China stocks today, and we saw some upgrading. We're about to see the shekel trade. It has been strengthening. It seems like a long time ago now that attack occurred. It was only just maybe 36 hours, and we are waiting on a response from Israel. But the shekel for now trading at 373, a little bit stronger than it was initially. Let's flip up the boards because I do want to point to the Middle Eastern markets. They are closed. They haven't opened for the Monday session yet, but there was a Sunday session. And again, it was quite muted. So the Tadawul opened up 1.8% lower, finished the session down 0.3%. As you can see, the narrow index in Tel Aviv was up about 0.25%. The broader index was also higher by about 0.3%. And then I thought I'd throw in Bitcoin because there was a lot of kerfuffle about how Bitcoin completely tanked. It was the only asset that was trading during the attack hours. There were lots of reasons for that, of course, but Bitcoin is returning. It's back above 65,000. And then silver, you mentioned gold, but it is interesting to take a look at silver. It's been tracking gold, and it's obviously doing a lot better today than gold is, up 1.3%.
OK, Vonnie Quinn, thank you very much indeed on the Asian and Middle East market reaction, of course, to what we've been seeing unfolding over the weekend. Let's get the latest then on our top story now and the details that have been unfolding. World leaders have urged restraint after Iran, of course, fired more than 300 drones and missiles at Israel on Saturday evening. The attacks, which were intercepted, mark the first time Iran has targeted Israel directly from its own soil. Prime Minister Benjamin Netanyahu says Israel will defend itself.
The state of Israel is strong. The IDF is strong. The public is strong. We appreciate the U.S. standing by Israel's side, as well as the support of Great Britain, France, and many other countries. I have set a clear principle. Whoever strikes us, we will strike him. We will defend ourselves against every threat, and we will do this calmly and with determination.
OK, for the latest then, let's bring in Bloomberg's Paul Wallace in Dubai. Paul, what do we know is the latest in terms of the thinking specifically around Israel's government and the reaction that may come from Israel to, again, this unprecedented attack by Iran?
Hi, Tom. It seems as if so far Israel is keeping its options on the table and still deciding exactly what it's going to do to react to Saturday night's drone and missile barrage against its territory. Obviously, this was a major and unprecedented attack from Iran. It didn't cause much damage. There was only one casualty, a 10-year-old girl, and light damage to an airfield. But nonetheless, this was a huge attack that required the assistance of not just the Israeli Air Force, but the UK, US, French, and other air forces in order to foil it. The US, the Europeans, and Arab states are all trying to urge restraint on the part of Israel. The last thing they want to see is this conflict in the Middle East escalating and getting more serious than it already is. As we heard there from Prime Minister Benjamin Netanyahu, he's not ruling out anything. He isn't being extremely gung-ho and saying that Israel will react aggressively to what happened on Saturday night. But as I said, that's still possible. Israel may bide its time. There's no indication that it's going to react immediately, and it could do this over the coming weeks. I think for the sake of its own public, it has to do something. There's a lot of Israeli ministers and analysts saying that it would be a very weak showing and a dangerous showing for the country if it didn't react in some way to Iran's actions on Saturday. That doesn't necessarily mean it has to strike Iranian soil in a sort of tit-for-tat response. It could go after Iran's proxies a bit harder than it already is, the likes of Hezbollah in Lebanon and groups in Syria. It could target some Iranian assets around the world without doing something as high profile as what the Iranian did on Saturday. But I think everyone is now watching Israel, and that is its reaction is the big question for global financial markets this week.
Yeah, absolutely. Bloomberg's Paul Wallace on the latest. Thank you very much indeed. As you say, Israel weighing up its options then, and Paul's view, at least the analysis, that Israel may not react or at least rush to action, but weighing up its potential options. Let's get the other side of this story then, or at least another angle, as of course, to the key geopolitical story of the moment. Tehran saying there will be no further attacks as long as Israel doesn't retaliate. The chief of staff of Iran's armed forces says the operation is now over.
From our point of view, this operation is over, and there's no intention to continue the operation. But if the Zionist regime takes any action against the Islamic Republic, whether on our soil or in places belonging to us in Syria or elsewhere, our next operation will be much larger.
OK, let's bring in Bloomberg's Patrick Sykes then in Istanbul. Patrick, is Iran then bracing for a potential counterattack from Israel?
Morning, Tom. I think publicly, and that's the important caveat, but publicly, no. There may be plenty of organisation going on behind the scenes, but I think Iran is very keen to present a picture where life is continuing as normal in Iran. That's, of course, very unlike what we saw sort of in the past week in Israel with these mobilizations and disruptions to normal life. So far, the only disruption we've seen is cancellation of flights yesterday in many of Iran's major airports, but that's been now lifted. So the message is one of normalization, at least publicly, as I say. At the same time, I think you heard the threat there from the military official that if Israel does respond aggressively, Iran is sending a message that it will be prepared to attack again, and it's keen to sort of strike that balance and say this is done, but we are prepared to come back at you if we're forced to.
And Patrick, of course, it signals to many that the conflict, the tensions between Iran and Israel, long running as they have been, have come out of the shadows then. What does it mean, though, for the shadow war that had been prior to this weekend and the tensions between these two sides?
That's right. There were some really interesting comments from Iranian military and government officials yesterday where they said, for example, this strike marks a new equation in that relationship, or it's the end of what they call strategic patience, where they've been willing to sort of let Israeli attacks slide and strike back when it suits them rather than being rushed into things. The message now is that whenever whenever Israel does strike Iran, does strike Iranians, strikes its assets, its interests, be that in Iran or abroad, that Iran will be willing to strike Israel directly in the way that we saw over the weekend. That's new. That dynamic is new. And I think that makes for a much more fragile dynamic in that shadow war, where previously incidents that have been perhaps allowed to let slide, or they've been de-escalated through revenge much further down the line, Iran is signaling publicly, at least, that from now on that won't be the case. The response will be immediate and it will be direct.
OK, so very much a significant turning point and a significant new chapter, of course, in this tension. Patrick Sykes, thank you very much indeed. He's been covering all of this for us across the weekend in detail. To the oil component now, and oil traders have so far shrugged off Iran's unprecedented attack on Israel, with prices easing, in fact, on speculation the conflict will remain contained. Let's bring in Bloomberg's Anthony Di Paola in Dubai. Anthony, on some levels then, fairly counterintuitive, the move that we're seeing in Brent and WTI this morning. Just unpack how the oil markets have reacted to this.
Good morning, Tom. Yeah, I mean, we had the slightest of increases just at the start of the opening before oil has come back. And what's that based on is basically the market seeing through kind of what happened and looking at, first of all, the fundamentals. Oil supply hasn't been affected. Oil continues to flow, and we don't see any interruption either to shipments through the Strait of Hormuz or to any production there. And looking at what happened over the weekend, the traders are looking at the fact that the Iranians have said that they see the retaliation as completed and done. The Israelis seem to be exercising restraint at the moment, and that factor that the G7 countries met, discussed it, and yes, while giving backing to Israel, didn't really support any more aggressive retaliation. So everyone really trying to keep a lid on the situation and kind of draw a line under this current situation of attacks. Now, this was a big escalation because we did see that first direct attack between Israel and Iran on their own assets, as opposed to this kind of proxy war that Patrick had just been talking about. So we'll see if we get a reversion to that and stepping back kind of from this direct conflict. But really, what traders are looking at was in part some of the risk that had already been priced into oil going into this weekend. So we saw a run up on Friday, and we have seen an increase going beyond $90 a barrel this month. So we have seen some of that priced in already, and then traders kind of taking their foot off the gas as they see the prospect that this won't go further or will be a more limited in terms of the escalation. So we're not seeing the worst case scenario yet, Tom.
So, Anthony, is that where the lens of traders is right now? What is the next thing that markets and traders within the commodity space, within the oil space, are watching in the hours and days ahead?
Well, just to be clear, the thing that the traders are looking at in terms of something that would be a catalyst to move oil higher is, as I said, any attack that would affect oil production or oil exports. So we're going to be looking at the Strait of Hormuz. Iran did come out last week and say that they don't plan to close the Strait of Hormuz, but they did take an Israeli-linked freighter in the Persian Gulf around the Strait last week. So that's a sign that they can react if they need to. We've also got the continuing Houthi attacks around Yemen. Those haven't yet targeted directly any kind of energy shipments, and that's why oil had remained muted in response to that. So traders will be watching, of course, for any escalation and for any escalation that does impact supplies or exports. But on the fundamental side, we've got a healthy market with demand going better than people expected, probably at least reaching the same levels that it did last year. But we've got a good supply situation as well, with lots of new oil coming onto the market from the U.S., from Guyana, from Brazil. And we have OPEC still cutting. So they've got spare capacity supply that they need to bring into the market. So longer term, traders will be watching just that. When does OPEC come back into the market, and when do they release those barrels? And that will affect the balance kind of towards the end of the year. So on a fundamentals basis, we see OPEC slowly releasing those barrels over the end of the year. But of course, that geopolitical question is wide open, Tom.
Anthony de Paula, fantastic analysis as ever from Bloomberg, of course, on these oil markets and the reaction to, of course, the conflict between Iran and Israel. Coming up, more analysis on what next in the Middle East conflict then. We're going to talk to Control Risk's partner for geopolitical risk, Sorana Parvulescu, on this story. The details, the analysis coming up after the break. This is Bloomberg. Welcome back. Let's get more analysis now on the simmering crisis in the Middle East. Let's bring in Control Risk's partner for geopolitical risk. Before we do let's check in on these markets then. We've been discussing with Anthony de Paula over in Dubai the consequences, the market reaction within the oil space to what's happening, of course, this unprecedented attack by Iran on Israel over the weekend. And oil prices actually moving lower. The view that a lot has been priced in leading up to this. It was flagged, of course, by the intelligence agencies in the weeks ahead of it. Currently, Brent at $90 a barrel, down 0.4%. WTI at 85.21. Let's get the geopolitical analysis then with geopolitical risks. Sorana Parvulescu, who joins us now for some context. Sorana, thank you for joining us this morning. Does Israel ultimately heed the advice of its US allies and avoid significant retaliation?
Good morning. Yes, that is the big question, I think, today. I think on balance, probably yes, they will. They will bide their time and decide how to respond in due time rather than necessarily launch something in the next few days.
What are the options you think Israel will be looking at right now?
So there are several options. The most critical, the most dangerous option, if you want, is that they would launch a strike against Iranian territory itself, and Iran's made clear that there would be a red line again. But also the US has made clear that they wouldn't support an offensive strike. That would be the worst case scenario that we're looking at right now. The other alternative options, which hopefully they're thinking of now, are either more tit-for-tat retaliation against Iranian proxies in the region, but not against Iran itself, or maybe in time more undercover sort of operations around the world as well against Iranian targets, which would really bring it back down to sort of the tempo we had a few weeks back before the attack on the embassy in Syria.
And when you talk of Iranian proxies, for some that would include, of course, Hezbollah across the Lebanese border. What is Hezbollah's role in this? Is there a risk that Hezbollah intervenes more aggressively in terms of its attacks on Israel?
I mean, Hezbollah has been quite cautious and communicated as such over the course of the conflict in Gaza already that it will react with caution, and it doesn't want to draw Israel into a war with Lebanon. But it is, to some extent, Hezbollah exists as a deterrence for Iran on the borders of Israel. So likely that there will be coordination between Iran and Hezbollah on next moves.
How significant do you put the risk of Iran closing the Straits of Hormuz if indeed you do get that, as you describe it, worst case scenario in terms of an Israeli attack on Iranian territory?
I think, there's anyone's, it's control risks will kind of go through scenarios, and the most likely scenario would be if we have an Israeli attack on Iranian territory, it'll probably be missiles against IRGC assets that from where the attacks were staged in a first phase. In that case, Iran would still have an option of whether it wants to respond or not. It could choose not to respond directly still. But if it does respond, it'll likely be again through missiles initially rather than outright blocking the Hormuz, which is not in its interest either. It will maintain it as a strategic option and use it as leverage once in a while, as it just has done over the weekend.
OK, control risk partner for geopolitical risk, Sorana Parvulescu. Really appreciate your analysis this morning, of course, unpacking, of course, the context around this Iran-Israel conflict. Thank you very much indeed. There's plenty more coming up. This is Bloomberg. Welcome back. Another big week for US bank earnings, with Goldman Sachs, Bank of America and Morgan Stanley all due to report. Joining me now is Bloomberg's Jenny Serrain, who covers all this for us across the team, of course, in the banking space. We had JP Morgan, Citi, Wells Fargo reporting on Friday. What were the key takeaways?
I think the big thing is they all kind of one by one said, this is probably the end of the boom times for net interest income. So with the Fed poised to cut rates, later this year, while there's a lot of discussion about when and how fast and how quickly they'll go down, they basically all one by one said, this is looking like the end of the boom times in net interest income. And so we're going to have to start relying on other parts of our business. And so you saw things like bright spots in capital markets, real good equity underwriting, debt underwriting results from these banks. And so you saw them start to kind of point to these other areas that might be able to kind of bolster results as that net interest income slowly fades away. OK, so a bit of a transition in terms of the earnings picture and the numbers that we're looking at. And when we're talking in the numbers, Goldman Sachs, then, the preview for today, what are the metrics that you and the team are going to be scrutinizing? Yeah, so they're the Wall Streetiest of the Wall Street banks. So when you think about a rebound in capital markets, a rebound in deal making, those are things that really benefit a Goldman Sachs. That being said, you had a lot of these big bank CEOs on Friday really warning that a lot of the industry was undervaluing the risk of geopolitical things. And so when you look at what happened over the weekend in Israel, how does that actually end up impacting the deal-making environment? Does that actually put us back on kind of the wait-and-see mode for deal-making? That's obviously all a huge risk to Goldman. So I think they're going to have to parse that out today. Even though we might have seen a little bit of a pickup up to now, does the geopolitical risk end up winning the day and kind of put us back on the back foot here? Yeah, we had that warning as well from Jamie Dimon, of course, at JP Morgan, warning on those potential geopolitical risks. You're talking about net interest incomes. You're talking about the fact that some now view a likely cut from the Fed coming through in September rather than June. Really, really interesting transition then we're seeing across the banking space. Of course, Jenny, thank you for the context with that preview as well of Goldman and those earnings coming out later today. Jenny and the team will be across all of that for us. Jenny Serrain, thank you. There's plenty more coming up as we look at European futures pointing higher by 0.4%. US futures, S&P E-minis also pointing up by 0.4% after a challenging week last week. And of course, the context is that so far this month, European and US stocks are off by about 1.5%, but a slightly brighter picture for the equity space despite those geopolitical risks. There's plenty more coming up. We'll keep across that story for you, all the details. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Diplomatic efforts intensify as Israel weighs a response to Iran's drone and missile attack. The UN chief calls for de-escalation to avert a wider conflict. Global markets show signs of stability, with crude prices easing as oil traders largely shrug off Iran's assault on hopes the conflict is contained for now. Plus, German Chancellor Olaf Schultz arrives in China for talks with President Xi Jinping,
on a mission to dial down tensions between Beijing and Europe. Let's check in on these markets. Yes, signs of relative stability, relatively sanguine in the face of these geopolitical risks, despite the unprecedented nature, of course, of Iran's attack on Israel over the weekend. This is a picture across the stocks futures then. European futures pointed to gains of 0.4%. The FTSE 100 lower by 31 points. That's what's being flagged on the futures. S&P futures at 5,187, looking to gain by 0.4% after a challenging week, of course, for US stocks last week. Nasdaq futures at 18,250, pointing to gains of 71 points. Let's look cross-asset then. There'd been a lot of scrutiny on the oil, gold and treasury reaction, and here is the pricing then so far in the session this Monday to these geopolitical risks. $90 a barrel on Brent, moving lower by 0.4%. Gold getting a lift, though, up 0.4 at 2,355 per troy ounce. 106 on the single currency, up 0.1%. The dollar is, in fact, a little softer so far in the session. The benchmark 10-year yield edging higher by close to 3 basis points at 4.55. Quickly reflecting on the metal story as well, because we had the ban midnight Friday by the US and UK on some metals being sent and shipped from Russia. Aluminium, nickel in focus, and you're seeing some price action there in the session today. Prices up on aluminium, up 4.9%. Nickel on the LME up close to 4% as well at 3.7%. We continue to keep across that story for you, the consequences, of course, for the global metals market. Let's cross back, though, to Vonnie Quinn, who's standing by for the broader market check and the reaction, of course, to that attack by Iran on Israel. How it's rippling across the Asian session and the Middle East. Vonnie.
It is interesting to see how the different markets are reacting, Tom. You mentioned that we're looking quite cheery as we head into the European and US sessions. Not so in Asia. We had a down session overnight, but there were a lot of factors involved. Don't forget, this was Asia's first opportunity to react to Friday's US data as well. And of course, the idea that some more cuts might be off the table, at least at the moment, for a longer period of time. But we did have some risk of sentiment really across Asia, particularly Australia and Japan and Korea. Not so much in China. We actually had an up session, the first in 7 sessions in China, because of support for stock markets. Some might call it a regulatory crackdown, some might call it regulatory support. Either way, it's giving Chinese investors in the mainland some hope that there might be a little bit more activity in that market. So as I said, the Nikkei, it was down about 1.8% at its lowest level. It ended the session down 0.9%. The yen continues to weaken. We are well above 153 now. We're very close to 154, another 0.4% there. And then I did want to point to the shekel, because we did see that improve. So it traded weaker. It began trading a little bit stronger in the wake of the attacks and the idea that, you know, the notes that I've been getting say things like sigh of relief or escalation averted. We have to see. We don't know that that's going to be the case, but right now the markets certainly feel like that will be the case. I do want to point to the session in the Middle East on Sunday, because this was just a few hours after the attacks. We saw Saudi Arabia open 1.8% lower. It ended the session down 0.3%. We saw a lot of volatility in Israel. We were down, we were up, we were down a lot, we were up a lot. We ended the session for the narrow market up about 0.25%, and for the broader market up about 0.3%. And then you mostly can see the reaction in silver a little bit more strong than in gold, up 1.2%. It has been tracking gold, Tom.
OK, Vonnie Quinn, thank you very much indeed in Dubai with the check on the Asian and Middle Eastern market reaction to, of course, the geopolitics that have unfolded over the weekend. The US, by the way, hoping, of course, to avoid further escalation. And talking of escalation, that is something, of course, that Vonnie was feeding into the market check there. Avoiding escalation, of course, is the focus for the US, leading to a wider war in the Middle East. That's something they want to avoid following Iran's attack on Israel on Saturday. US Secretary of State Antony Blinken says that while the US is not seeking escalation, it will continue to support Israel's defence. Let's bring in Mark Champion from Bloomberg Opinion. Mark, are the markets, in your opinion, being overly sanguine about the risks here, or are they reading this right?
I don't think they're being overly sanguine. I think the important thing that happened was that the Iranians, as soon as they had made this very large attack, they immediately said, as far as we are concerned, this concludes it. So the fact that the Iranians took that view, and the fact that in reality, despite it being an enormous attack, unprecedented, it actually failed. So the vast majority, virtually all of the missiles were shot down. There was minor damage. One Sadly, one young woman is badly injured. But in terms of what might have happened, it largely failed, and that creates the space for Israel, if it wants to de-escalate, or at least to put off any response. And it looks like that the latter is what they're doing. They had a fairly inconclusive war cabinet meeting last night, and they, while they're keeping all options on the table, they prepared options to. They've said the IDF has said it's prepared all the options in order to take retaliatory action. They have not said they're going to do so, and it sounds like there is at least going to be a delay.
And Mark, one central point of tension seems to be between the right-wing members, the extreme right-wing members of this war cabinet, and the pressure coming through from Washington and the US president and his team. How do you see that tension evolving, and how consequential is that? And how does that tie into your view that this could be an opportunity, this moment, for Israel to regain the international initiative that arguably it's lost?
It is that tension is very real. It is very significant. It has been a huge driver throughout the conflict in Gaza, after the Hamas attacks of October the 7th. And it is, very consequential. At the moment, in terms of retaliation against Iran, Netanyahu's hand and the hand of the sort of more dovish cabinet members are strengthened simply because the role that the US played, the role that the UK played, the role that Jordan played, these were all quite material. And they, for the first time, really, since early on in the Gaza war, put all these allies on the same page again. And that is something that that the Israelis will be loath to give up lightly. On the other hand, the right wing of the cabinet is making demands, will make demands. What we may see play out is a negotiation, really, between Israel and the U.S. Over exchanging really restraint with regard to Iran for more U.S. support to resume the war in Gaza and go into Rafah. In my view, that is a mistake unless it's extremely well prepared, much better prepared than previous assaults, and to make sure that there aren't civilian casualties in the same way. But that we may well see that as a negotiation that goes forward.
OK, Mark Champion from Bloomberg Opinion. Thank you very much indeed. Well worth reading Mark's pieces, of course, opinion pieces on the terminal and on Bloomberg.com for that context and analysis and those views. Now, switching focus to the German Chancellor, Olaf Scholz, who is currently in China, has begun his second visit to China. He started in Chongqing. He's expected to deliver the delicate message that Beijing has not acted on European warnings to end discriminatory business practices. Joining me now is Bloomberg's Oliver Crook, who looks at this from both angles. Ollie, in the journey then from Berlin to Beijing, what is Scholz hoping ultimately to achieve?
Yeah, Tom, he's walking really a very delicate tightrope here. It's his second visit as Chancellor, as we've mentioned. He's going to meet the Premier, he's going to meet the President, he's going to meet local officials all around, as you mentioned, in Chongqing. And just to give, illustrate for the audience, perhaps people who are not so familiar with this city, maybe they haven't heard very much of it. This is a city of more than 30 million people in it. It's one of the biggest on the planet. And this really illustrates why this market is so important to Germany. And as you can see, the CEOs with him, you have BMW, Mercedes, Siemens, BASF, Bayer, Merck. And in terms of what he's actually trying to achieve and the agenda topics that he's going to be speaking about, there's obviously the war in Ukraine, which sort of looms heavily, very large over this. We know sort of where China's position has been on this. That is going to be hard to make any sort of progress with. There's the EU dumping probe, yes, on EVs, but also on other topics. And we heard a lot about it from Janet Yellen last week when she was in China, talking about this overcapacity that China is bringing into the market, and the green transition, which of course is also connected here. We talk about the solar industry, for example. The U.S. and India have put up trade barriers on the solar panels that come from China because they are so low in price. Those have all come into Europe, and that has really driven the price down. So these are all the topics, and it's very challenging for Schultz because it is such a key economic relationship. As you can see, $250 billion euros traded last year with China. It's the biggest trading partner for Germany, though it is down 15% from the year previous. And what Schultz needs to do is to walk that fine line, on the one hand, preserving the economic relationship, while on the other, not trying to step on the toes of the policy relationships and the policy goals of the broader EU.
Ollie, does that move lower, 15.5%? Does that talk to the de-risking that Olaf Scholz and his team have talked about when it comes to the China story? How real is that?
Yeah, perhaps to a certain degree, Tom, and I think it's really interesting when you look at the different things. So just to illustrate the point of how massive this relationship is for these companies, I mean, BMW, they sell a third of their cars over in China. Same thing with Mercedes. BASF is about 13%, but China is 50% of the chemical sector. So BASF isn't looking back. They don't want to de-risk. They say this is where we need to be. Siemens is closer to 12%. But when you look at some of the data and what the companies are saying, this is actually very interesting. When they did a survey, the German Chambers of Commerce in China, saying, basically, do you have equal access to the market? Is it a fair competition? 2/3 of German companies say that they face unfair competition in China currently. But what's also interesting on the question of de-risking, the German companies at home, where is China in their supply chain? Still more than a third of the manufacturing companies have that. That is down 10%. So that is one thing. But Tom, when you look at foreign direct investment into China, and this is obviously a key metric here, we hit a record last year of 12 billion euros. So really, on that front, you know, German companies say we need to be in this market and we need to win in this market, and they're dumping cash into it.
OK, Bloomberg's Oliver Crook on the importance of this visit by the German Chancellor to China that continues, of course, starting in Chongqing, now in Shanghai. Ollie, thank you. Coming up, can the UK build its tech industry into a leader in AI? How realistic is that? We're going to speak to Noel Hurley, the CEO of AI company Literal Labs and a former VP at chip designer Arm. That interview is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's take a look at the tech sector right now. Microsoft recently announcing plans to open a new AI hub in London to drive work on advancing language models, large language models, LLMs, and supporting infrastructure. Joining me to discuss the future of the UK tech sector then is Noel Hurley, CEO of Literal Labs and a former VP at UK chip designer Arm. Of course, such a consequential company within the tech space based in Cambridge, listed in the US. Noel, thank you very much for joining us this morning. Let's talk about, this is something clearly that Rishi Sunak, the Prime Minister of the government, will welcome. They've wanted to craft the UK into a leader, a global leader when it comes to AI and tech. What are the consequences of a company, what is the significance of a company like Microsoft building out, developing and investing in an AI lab here in London?
Well, I think it's a fantastic endorsement for the talent that we have in London and in the UK more broadly. You know, it validates a long history of computer science and research off the back of what are really good, strong universities from a research perspective. And it's not just Imperial, Oxford, Cambridge, the obvious ones, but also universities like Manchester, Sheffield, Leeds, Newcastle University, etc. So across the country, there's a fantastic base of research. And this is validation that we are world leaders in this space.
And Literal Labs, of course, spun out of Newcastle.
We're a spin out of Newcastle University.
So I want to get your take on what your company is doing and the proposition around AI from Literal Labs shortly. But let me get your view on talent here in the UK, because you touched on that. What is the depth and breadth of that talent? How aggressive is the fight now for talent? Because I'm hearing from some AI companies in the US coming over there, poaching from the likes of DeepMind and others. What is that looking like right now?
It's really competitive from a talent perspective. You know, again, because we have this history of having around computer science and AI in this country, then we're an obvious magnet for corporations to come into. And you mentioned DeepMind. DeepMind was one of the early innovators based here in London in 2010. So it just goes to show that We have the talent. Actually, talent attracts more talent as well. So researchers want to work together, and they want to work on the biggest problems together. So this country has become a hub for AI talent.
Well, so what does Literal Labs do? Are you able to stand out? There's risks people are flagging risks of a bubble within AI. You're out fundraising right now. What is that looking like? What do you do? What's the proposition? What's the funding looking like?
So for us, the big challenge that we see in AI is it's computationally incredibly complex. And so as a result of that it's just not sustainable from an energy perspective. We need to address this complexity problem. And that is what we're looking to do at Literal Labs by taking and developing a different approach that is more energy efficient, it's fast, and it's computationally more efficient than the classic neural network approaches that we see today.
And how receptive are investors to that idea, to that proposition?
They are very receptive to that proposition. I mean, I think you've got to be blind to not recognize that the AI energy problem is real, and we need to do something really quite significant to address that if this is going to scale and meet its promise. That message resonates, I think, around the world.
That's cutting through. The Financial Times reporting today that the UK government is now looking potentially at regulating around AI. Having said that they were not. They're going to take a hands-off approach.
Yes.
What would the policy prescription look? What should it look like, the policy prescription from the UK? Does it need to mirror the EU AI Act? Do you have problems with that? How should the regulatory framework build out here in the UK?
Do you know, one of the biggest challenges with regulatory frameworks is they generally lag the technology. And that's the biggest challenge from a business perspective, is many of the rules are written on how the technology was months and months ago. And so that can cause challenges within business. A certain amount of regulation is good. It's just how well it keeps up with the progress in technology. That I see as one of the biggest risk factors. So whether you do a lightweight or a heavyweight regulation, actually, I personally prefer a lighter weight regulation, but recognise regulation is important. This affects people's lives, and therefore we need to have good regulation.
And just briefly, you're out fundraising right now, early stage.
Yeah.
So let's see if you push back on this. But at some point, you're going to be looking to IPO and to list. Would you look at the UK? It has the talent. Does it have the fundamentals in terms of the capital markets for a company like yours?
I think that's one of the biggest challenges in the UK. Is we have all of this fantastic talent here, and yet we don't have a Microsoft, we don't have a Google. And why is that? Actually, we have a really good startup community, and getting startup funding is strong in the UK. The challenge comes at the scale-up stage. When you've proven out your technology and you've got a customer and you've got a market, then you want to scale, and you want significant amounts of capital at that point to scale worldwide. And that's where the big hole is in the UK. And actually, in most cases, it's almost institutionalized now that startups in the UK end up opening a presence in the US and moving there for that scaling capital. I think that's one of the challenges. And if the government's going to address anything, it needs to address that gap, that scaling gap in business.
Really, really, really interesting. Noel Hurley with a company to watch there, Literal Labs, the CEO of that company, formerly VP at the chipmaker Arm. Noel, thank you very much indeed. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. Now, first quarter earnings will be pivotal for the European market after it suffered 2 quarters of misses and negative revisions. Joining me now is Tim Craighead from Bloomberg Intelligence, who's been doing a deep dive and a preview on all of this for us. Tim, with equity markets, they're not far off record highs. What is your view as we head into an earnings season that some would suggest is more important than even the central banks at this point?
I think you're right in a lot of ways. As you highlighted, we've gone through 2 quarters of declining earnings. We're suffering negative revisions in terms of consensus expectations now for the better part of 9 months. Valuations have lifted. because of the central bank pivot sentiment that has developed. And that makes for a tricky earnings reporting period. What we'll see here, hopefully, is a bottom-up view on how companies are executing on a handful of underlying themes that could transcend the earnings picture, or I should say the macro picture, as we look out over the next 12 to 18 months.
And Tim, you've highlighted 10 companies in particular focus for you and the team here in Europe during the results season. Tell us which companies those are, why you've zeroed in on those.
Yeah, as I said, there's a handful of underlying themes that we think are particularly important, whether it be what's going on with China, what's happening with technology, things along those lines. And, we cover 2,000 companies. We do earnings preview work. What this note does is bring together the preview on what we think are a handful of key bellwethers that should give a finger on the pulse of some of these key trends.
And Tim, what are some of the key metrics that you're going to be looking at across these companies? Is it going to be margins? Is it going to be volumes? Is it going to be an inflationary input? What is it that you're going to be kind of focused in on when it comes to the particular metrics?
Well, so let's look at China. It's obviously front and center. You've got a company like LVMH. We need to see what transpires with their sales trends. Are we continuing to see travel? And what is the demand from a bottom-up perspective on mainland China? Porsche is another case in point where China is critical. With them, you've got the high-end sales trend. You've also got the transition to EV. And China is on the order of 30 to 35% of its earnings. So I think it does depend on which company, which trends you look at. In technology, you can't have a conversation today without talking about AI. Yeah, NVIDIA might be the poster child from the chip perspective, but ASML is the enabling technology, and seeing what their order growth in terms of CapEx spending will be crucial.
Okay. Tim Craighead from Bloomberg Intelligence with a really important preview of a crucial earnings season. Thank you, Tim. Plenty more coming up. John Kirby, Communications Advisor for the White House National Security Council, will be joining Surveillance to discuss the escalation in the Middle East. Markets Today is up next. This is Bloomberg.